Hello there, and welcome. Every once in a while, you see a stock chart that just makes you scratch your head. And today, we've got a fantastic one. We're going to be detectives and dive deep into the wild story of APLT. This thing is just a masterclass in contradiction. So how can a stock look like an absolute rocket ship and a giant red flag at the exact same time? Well, let's decode it.
Just look at this number, plus 121%. That's not over a year. That's in a single day of trading. Now, a move like that, it usually screams one thing, right? It screams buy. But as you're about to see with APLT, it's really not that simple. Not even close.
And this is where our mystery really begins. You've got that insane, explosive jump, but the full technical analysis comes back and says neutral. And even crazier, low confidence. How does that happen? How can a stock basically go vertical, but all the underlying data tells us to hit the brakes? That's the puzzle we are going to solve together today.
So here's how we're going to break it all down. First, we'll look at the anatomy of that incredible spike. Then, we'll build the case for a bull run, followed immediately by all the serious warning signs that are flashing. After that, we'll map out the key price levels, the battlegrounds really, and finally, we'll deliver the verdict on what it all means.
Okay, first things first. Before we can even begin to understand the why, we have to get a handle on the what. Let's dissect the anatomy of this absolute explosion.
So yeah, the headline number is that price jump, leaping from just 56 cents all the way to $1.24. But look at the fuel behind that jump, the volume. We're talking about over 114 million shares changing hands. That's not just a little bit of interest. That is a tidal wave of money and attention that turned a simple price move into a huge market event. All right, so with that kind of crazy explosive move, you'd think there'd be a ton of positive signs, right? And you would be absolutely correct. Let's start by looking at all the evidence that says this bull run might be just getting started.
So this right here, this is Exhibit A for the bulls. The current price of $1.24 isn't just a little high. It is absolutely crushing all of its key moving averages. Think of those averages as the stock's typical price over time. Being this far above them is a classic, really powerful signal that the recent momentum is just incredibly strong and pointing straight up.
And it's not just the price alone. Other really important trend-following tools that traders use, like the Arun indicator and the MACD, well, they're also flashing bright green. I mean, from pretty much every bullish angle you look at this, it seems like a slam dunk. But this is where our story takes a sharp turn, because there's a completely different narrative being told by other parts of the data.
And now, for the bearish case. For every single bullish signal we just talked about, there is an equally powerful and frankly pretty worrying counter signal. This is where our detective story gets really, really interesting.
Here it is. This is the entire conflict on one slide. On the left, you've got those powerful go signals we just covered. But on the right, you have these incredibly loud stop signals. That term distribution, for instance, it suggests that while the price is flying high, some of the big players, maybe the insiders, might be quietly selling their shares into the frenzy. It's a perfect technical tug-of-war.
Let's zero in on that on-balance volume, the OBV, because this is so important. This indicator basically tries to track where the smart money is flowing. For APLT, the OBV score is a massive negative 23 million. Now, to see a negative number this big while the price is exploding upward, that is a huge red flag. It suggests that underneath the surface of this really exciting rally, there's a powerful wave of selling that's working against it.
And then, you've got this. The RSI, which is all about the speed and change of price moves, is at a staggering 89.47. Now, just to put that in perspective for you, anything over 70 is already considered overbought. That means the stock has probably moved way too far, way too fast, and it's due for a pullback. To be all the way up near 90, well, that's like a rubber band stretched to its absolute breaking point.
So, with this intense fight going on between the bulls and the bears, where do we look for clues to see who's going to win? Well, the answer is right there in the price chart itself. Let's go ahead and identify the key levels that are going to be the next major battleground.
These are the lines in the sand. If the bulls want to prove they're still in charge, they have to smash through those resistance ceilings, especially that recent high of $1.32. Now for the bears, their goal is to push the price back down through the support floors, like that key 50-cent level. And that 93-cent level, by the way, that's a Fibonacci level, a key point that traders watch very closely.
Which of course brings us to the ultimate question.
We've got these incredibly strong signals telling us to buy, and at the same time, equally strong signals screaming at us to sell or just stay away. So what on earth is the professional take on this completely chaotic situation?
And now for our final section. Let's put all this conflicting evidence together and get to the expert conclusion based on the analysis. This is the absolute definition of a trader's dilemma.
And there you have it. The official verdict is, well, it's a shrug. It's inconclusive. The data is so contradictory, so evenly split between the bulls and the bears, that the only honest signal you can give is neutral. And that low confidence part is so important. It's basically the analysis admitting that this stock is wildly unpredictable right now.
And this is the direct advice from the source material itself. This is not the time to be a hero. The recommendation is for extreme caution. So if you don't already own the stock, the guidance is pretty clear. Stay on the sidelines, let the dust settle, and wait for a much clearer picture to emerge.
So let's just boil this whole thing down to 3 simple steps. Number 1, you have to acknowledge that the incredible upward momentum is real. You can't ignore it. 2, you must respect the very serious warnings coming from the overbought indicators and that negative volume. And 3, the only logical conclusion when you put it all together is that the risk and the uncertainty right now are just too high. They completely outweigh the opportunity.
And that really leaves us with a final thought to chew on. In a market that is just filled with noise and conflicting signals, we often feel this pressure to make a decision, to do something. But as the crazy case of APLT shows us, sometimes, when the data is screaming at you from both directions at once, the most strategic and maybe the wisest move you can make is to simply stand still.